Isn't it fascinating? On a day like this, where pretty much everything is going down, there is this one asset, Conflux, with the CFX token, that's going up massively, an increase of almost 40%. The question is why? Who's buying here? Who's selling here? Let's have a look at the data most people are not considering. Now, this is not the first video on Conflux on this channel. I publish videos regularly. The last one is just 1 week old. At the very beginning, there was a lot of talk around Conflux. So this was the first video published 888 days ago. It outperformed the average video by roughly 2x. So the average video is here, this gray area, and the blue line is that very first Conflux video. But the recent video on Conflux actually underperformed. Now suddenly it gains traffic again. But that's the issue with YouTube, right? When an asset is not yet going up, nobody's interested. Once it starts to rally, then everybody is wondering what's going on. So as YouTubers, we are not necessarily incentivized to talk about the small hidden gems that nobody has on their radar. The actual incentive is to talk about assets that already have quite a bit of an audience. Now in the last month, Conflux went up by 250%. But have a look at how it appreciated. It went up very, very quickly to then slowly come back down again. So now going up very, very quickly again. Does this look like natural organic growth, or rather potential short-term price movements triggered by the heavyweights, by the people that have a lot of capital to move things around? Now, there are indeed news around Conflux. Conflux has now a renminbi or yuan-pegged stablecoin and has launched Conflux 3.0, so a way to process more transactions, a technical upgrade. Yet the long-term price development versus Bitcoin and Ethereum wasn't too great. This is CFX relative to Ethereum since March of 2021. Conflux underperformed Ethereum by more than 90%. But sometimes we see these very quick rallies that then subsequently tend to long-term deflate again. Currently, we are again in such a rally. Now, where does the long-term underperformance come from? Why did we see all of that loss in value? The reason, as so often with many altcoins, is tokenomics. It's tokens that get issued over time. Maybe early investors get token unlocks, can then sell off those tokens. Maybe the team gets some tokens that they can then sell. So over time, the supply is expanding. And if the demand doesn't grow at the same rate, then the asset tends to do worse than Bitcoin and Ethereum. And the same was true for Conflux. The project started out with only 40 million CFX and then went all the way up to 5 billion. So that's more than a 100x in supply. So that's not really a surprise that it's hard to outperform Bitcoin and Ethereum when the supply grows that quickly. But this chart also tells another story, right? It tells us that the supply expansion has now finished. Since October of 2024, the supply of circulating CFX tokens is not going up anymore. And October of 2024 is roughly around here. And indeed, after the recent rally, we did not see much of an underperformance versus Ethereum anymore. But that then begs the question, if the downward pressure through all the continuous selling has now stopped, does it actually make sense to buy into this rally now? I am not so sure, because very often when we see these rapid price increases, this tends to be market makers that try to induce potential short liquidations. Very often those liquidations come in several rounds, in 2 or 3 rounds. We saw one over here, then a second round over here, and then a third, which we don't see often, but sometimes over here. We had something similar around March of 2024, a first wave of liquidations and a second one. And now again, a first short squeeze, a retracement, and a second short squeeze. We see this across several assets. Have a look at Dogecoin, for example, right? This is the Dogecoin dominance. The second short squeeze doesn't always have to be higher than the first one. So here's the first short squeeze, a retracement, and the second one, and then a subsequent deflation. Over here again, short squeeze, deflation, secondary squeeze, this time higher than the first peak, subsequent deflation. Again, a squeeze, a retracement, a secondary squeeze, and the final deflation. And it seemed like something similar is now happening for Conflux. The question is, at what point in time does this turn around? When are we going back again to regular prices? I think instead of trying to bet on a retracement right now, it's probably better to wait until the momentum has clearly turned around, because it's very hard to pick the perfect top here. Because here's the thing, the price discovery does not happen on the spot market anymore. It happens on the perpetual futures. Most trading volume happens now with bets on the price that have leverage, that tend to just have capital deployed very short term and that moves from asset to asset regularly. So have a look at this. This is a trading volume on Binance. It's where currently Conflux is traded the most. In the last 24 hours, we saw 135 million worth of trading volume on the spot market. But compare this with the perpetual futures market. Here we've got very similar trading volumes. So MEXC with 108 million worth of trading volume. Most people that bet with perpetual futures on Conflux bet on rising prices. So the longs have to pay the shorts. The funding rate is positive most of the time. But have a look at how much open interest fluctuates over time. And also check how much this correlates with the spot price. When there's a lot of open interest, the spot price tends to be high. When there's less open interest, the spot price tends to follow as well. And recently we have peaked in open interest at 350 million, and that now tends to decline again. The trading volume on the perpetual futures has also peaked. And surprise, surprise, the shorts got liquidated during that rally. So I'm personally not betting on either direction here, because the short squeeze could last longer and the token inflation is not existent anymore, right? It's better to bet on falling prices of altcoins that have increasing token inflation, where the supply is still expanding. This is not the case for Conflux anymore. It is a risky bet to just bet on falling prices. There is the potential that this could rally further. Now here's the problem with the crypto space. Everybody talks about the next 10 or 100x returns with the next small meme coin. But the issue is, if you bought any of those assets that are recommended in those videos, you very likely lost money. And that's simply because returns are concentrated in just a few winners. The vast majority of altcoins loses all the time. And this is all just preying on your emotions, preying on your greed. I'm trying to go a different route with this channel. I'm trying to figure out what are strategies that long-term make money, where we don't just pick the needle in the haystack, but where actually statistics are in our favor. You might have seen my analysis on moving averages, right? How the best simple moving average for Bitcoin is the 120-day. So we should buy Bitcoin whenever the price is above the 120-day SMA, and we should potentially sell it when it's below. So that's this line over here, the line in turquoise. I've been talking about this regularly on this channel, and it helped me very well to time the market to be out when there's potentially a correction, and to be heavily invested whenever we are in a bull run. And so we get those back-tested results, but that's a problem, right? It's a back test. It's a simulation of how well did this thing work in the past, but there's not necessarily a guarantee that it works in the future as well. And then there are those other counterintuitive approaches, right? Where we don't try to buy the one altcoin that outperforms, but we rather bet on altcoins doing worse because of all of the expanding supply. I talk about this all the time on this channel as well. So for example here, right, this is Balancer, which had a very extensive supply expansion, and that then leads to Balancer going down over time. And then we also talk about how can we potentially reduce the risk that we don't get stopped out during those temporary rallies of 100%. And then we talk about potential relative valuation trades, right? Balancer relative to Ethereum, for example, underperforms more consistently, so we can bet on that going down long term. I made money with this regularly. And so this is then where it gets from simulation to actual performance. I personally have made money with relative valuation bets for a long time now. Almost 4 years, it's 46 months. And had I just dollar cost averaged into Bitcoin, I would have gotten this light gray line here as return. But because I also bet on very poorly performing altcoins to do worse than Bitcoin, I got the performance here in black. And so we don't just have a simulation, we also have actual returns. But again, that's just me, and that's not showing it live. And so I went one step further. I opened up a portfolio of 2.5 months of relative valuation bets, where I showed the members of this channel, what do I bet on? Where do I go long? Where do I go short? And over 2.5 months, that portfolio made 50%. So I started with roughly 40K and then ended up with roughly 60K. But then again, it's just myself again sharing my performance, sharing my trading. It doesn't necessarily mean that you can achieve the same as well. I'm trying to be much more transparent than all of those other YouTubers, I try to share strategies that genuinely work. I'm not pumping and dumping based on any money that I got from any crypto project. I never take any money from any crypto project, but still, this is just myself trading. And so this is then 3 weeks ago where I went one step further, where I changed something, where I said, okay, I'm ready to take money into a capital pool. I execute the trades, and then you get the exact same performance that I get. All the negatives, all the positives. And over the time, we are already in profit. We are now at 4.7% in profit. I started out with my own money with 100K, and various members also deposited quite a bit of capital. And so I was wondering, how can I provide most value? For the people that have a lot of time, but not yet that much capital, they should be able to learn those strategies, those relative valuation bets relatively quickly. They should be able to make money very fast. And that's what all those tutorial videos are for, right? There's a lot of tutorial videos in premium. Feel free to just binge watch all of this. There are two main videos that are absolutely essential. So that's using perpetual futures on Hyperliquid to bet on relative valuations. And it's this one over here, risk management with relative valuation bets. Because if you don't manage your risk, then using perpetual futures is a bad idea. So when you've got some time, but you don't have that much capital yet, then the monthly membership for 125 is for you. That's just for you to learn all the different steps. I share my own trades as well. You can copy trade me. I will also share my favorite trade with you. So in case that favorite trade will not make money in the next month, then I will also refund you the $125 per month. So it's basically risk-free for you to enter this membership. But in case you don't have time to do the copy trading, in case you don't want to watch the tutorial, then you should probably go with yearly, because over here you get access to the automated copy trading, where we are so far in profit with 4.7%. And while I cannot guarantee that this will continue to stay a profitable strategy, I feel quite confident executing this for the members. Again, because I have very positive experience with that for the last 4 years. And it's not just because of random bets, because I got lucky with a small meme coin that 100x'd. It's because we use the market structure to our advantage, right? When the early investors and the team cash out, when they dump the price because the supply is expanding, then we make money at the same time. We basically flip a chart like this, so that it looks like this. This is the kind of performance we are looking for. And so for the annual members, there is the copy trading mechanism. You just have to watch a single video, 18 minutes in length. It shows how to send the money to that pool. The average deposit is around $13,000. So if you only have a few $100, then the annual membership is probably not for you if you just do this for the copy trading. But if you've got 5,000, 10,000, potentially more to deploy into a risk-on strategy, then feel free to check it out. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers!